Hello friends, welcome to another video on Tutorials Point with me, Richa. Today under Corporate Management, we will talk about a very essential and important module which is called Determining the Capital Structure. Well friends, for any organization or corporate to really flourish properly, you need to have a proper flow of income or capital. Cash flow is the most important thing for any new venture today. So let's take a look at this module. Well, on the agenda, we will talk about identify different sources of funding your business, loss or rather the cost of capital, factors influencing the choice of financing, merits and demerits of your own funds, merits and demerits of venture capital, merits and demerits of equity shares, and lastly, merits and demerits of preference equity shares. So, well, what we will understand is how all of these factors can affect the growth of your organization in terms of pumping in the money to make your organization flourish. So sources of funding business, there are different ways of funding your business if you are doing a startup company or starting your own venture or a business. Well, sources of funds can be borrowed capital as well as owned capital. Under borrowed capital, we have venture capital, equity shares and preference equity shares. We will take a look at the pros and cons of all of these now. Well, the cost of capital is the money which is required to set up any business is known as capital. Capital comes at a cost of alternative deployment, benefits to promoters, cost of raising the capital from different sources and ventures, cost of servicing preferential capital and cost of servicing equity shares. Well friends, everything comes at a price and there is nothing called as a free lunch, right? So today we will talk about how these different kinds of ways of really pumping in money into your business. The merits and demerits of venture capital. Let's first take the look at the pros or the merits. Easy availability of capital, provided you have a concrete business plan. If you do not have a concrete or a foolproof business plan, nobody would want to really put money into your business or your new venture, right? So you need to have a foolproof business plan. Bring in professionalism in the management. People in the top management need to be really professional. Provide access to network of influential people. Well, the demerits of this particular venture capital are large amounts may not be available. Now, whoever is putting money into your organization may not put in large chunks of money that you might require. If you need like a 30 lakh to start your business or a 50 lakh, you might not get all of it together. So that could be one of the cons. Loss of control, well, you might not have the full control of that particular venture. You may have to price the equity at par. So these are certain merits and demerits of venture capital. Now let's take a look at the merits and demerits of equity shares. Well, the merits are permanent long-term of finance. So you do get like a good long-term finance plan for your particular venture. No repayment liability, so you can be a little more relaxed because there's no repayment of the liability. Capital can be issued without creating any charge over the assets of the company. Well, the demerits are it involves high flotation cost, and if you are prepared to that, to take that kind of a risk, only then go in for equity shares. Second is issue of additional shares dilutes the control of the top management over the venture. No tax advantage, so if you are filing your income tax returns, etc., you don't really get any kind of added benefit of tax. Makes capital structure a little rigid. So these are the demerits of equity shares. Let's take a look at merits and demerits of preference equity shares. Well, on the merits or the pros of it, it provides a long-term capital for the company. Now, any company to float over relaxed, in a relaxed manner, it needs the finance to have a long-term plan. So that's one of the merits. Secondly, it has no participation in voting. Thirdly, flexibility in capital structure by redeemable preference shares. On the demerits or the cons of this particular preference equity shares, you don't again get any tax advantage. Secondly, adverse effect on credit worthiness. So if you are planning to take a big time credit on something, that could be going against you for equity, preference equity shares. And thirdly, permanent burden of payment of dividends. So this burden which comes on to you to really give dividends at regular intervals can be one of the demerits of preference equity shares. So these were the merits and demerits for this. So what we're really looking as when to choose or what to really choose for your particular organization or corporate. Well, some factors that may influence your choice of financing is because finance is something which is really important for any corporate or any organization or any business startup. So payback period, you need to consider this particular factor, that how long do you have to pay back that particular money or capital which you have taken from whichever sources you have taken it from. Secondly, what is the cost of the funds? Thirdly, desire for management control. If you are somebody who likes to be in control of your entire organization and the management at the top needs that kind of control, then you accordingly need to choose the equity shares or the venture capital, etc. Fourthly, competitive positioning. How well are you really positioning your company or your business into the competitive market? And lastly, stage in product of life cycle. So where exactly do you see your company going in terms of the life cycle of the company? All these issues and all these factors rather would help you choose the best kind of capital structure. It will help you determine your capital structure accordingly. Well, to conclude on this particular module on determining the capital structure, we have taken a look at businesses can be funded by owned capital or rather through borrowed capital. Borrowed capital can be in the form of your venture capital, equity shares as well as preference equity shares. The capital structure is influenced by factors like the cost of raising funds, desired management control, competitive positioning as well as your product life cycle. So whether you want to go for borrowed capital or you want to go for capital structure, it again depends on what exactly is your plan of action when you start your own business or any kind of a venture. So costing is something which is really essential and you need to keep it in mind that it is one of the very, very important factors which can make or really break your presence in the market. Well friends, that brings us to the end of this particular module. I hope you have enjoyed listening this, to us on this particular module. Keep watching, more videos coming your way. Till then, thank you.